1, 2, 3, 4. Let's go. All right, TRIP. TRIP, NASDAQ. And I got this little beauty from stageanalysis.net. Like always, it's my whale. And I just keep fishing in it. And there's always these great ideas. After that, it's go time. Time to put in the work. Let's see what my higher time frame, my monthly defined support, my monthly defined resistance. Here is a bottom formation. This is monthly, guys. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like a year consolidation pattern. It's target. Reaching previous highs. We're getting close to that. Making a bigger pattern. When that bigger pattern gets broken out of, makes even further away target. And then, what's that? You always got to be careful, guys. I have this thing called the profit considerations, target considerations. And when you have targets that you see that run through walls, which I call previous support turn resistance or previous resistance turn support, it's a congestion zone. You could have pullbacks there. Price action could slow down. You got to be wary of those. And when you have targets that really go like too high above, either you didn't do the pattern correctly, or you just have to adjust, guys. You lower it just to make sure you're on the right side of all that resistance. You get triggered out. You hit your target. You're below a round number, below 70. And after that, yes, you'd lower the risk to reward ratio, but you increase your probabilities of having a successful trade. So that's a trade-off. And that's a technique to avoid greed. Usually, even it's the worst. We do the opposite. We stretch a target. We stretch a target. Maybe the target's gonna go all the way up here, guys. It's gonna blast through this resistance. Well, remember, the further you are away from your breakout line, the least probable you are of reaching that target. It's just the way it is. Makes sense, right? So right now, this is how I see it on the monthly. Break out of this bottom base, thrusting the trend to go upwards, and then just continuing. And if we close above that 53 level, then we have that further away target close to the 70 level. So it's very constructive. You already have a monthly defined breakout, and now you just have bigger pattern going upwards. Smaller patterns, bigger patterns, but they're all breaking out in the same direction. And that is your confirmation of the trend. All right, let's zoom in. Weekly. What do I have here? Remember Ichimoku cloud? Red is resistance, green support. When you're below the red downtrend. Right here, we seem to have a nice, here's stage 4, nice stage 1. And look at that. Our breakouts thrusting above the resistance line, skewing the 30-week average up. See these candles here? You could almost guess. Look at the volume candles when you see those big candles that have twice the average volume. It's just beautiful, Stan. You know that there's a breakout candle associated to it. Then after that, contracting volume, low volume, sideways move. That's healthy. And after that, bam. That's when it explodes. It's usually after the second breakout. The first one, okay, it's like the market, okay, there's something up with the stock. But after that, the next one, bam. Look at that volume. You could see that candle. It's beautiful. It's classical stage 2. This is screaming buy right here. A few weeks back. And you're out of the Ichimoku cloud, the defined resistance. 1, 2, 3, like 3, 5-6 weeks back, man, this was a buy. And this looks pretty much no pullback here, guys. Wow. Yeah, sometimes there's some of these, right? You say, I'm going to wait for the pullback. I would have set my alert right here, just a little above the breakout line, in case it pulls back, and now it never did. It could pull back from here, guys. Usually it's 1 to 3 months. 1, 2, 3, 4, 5. That's 6 weeks. Who knows? Maybe we'll get a chance. Maybe if I say anything, if it goes under this level here, 48, on contracting volume. So if we have the same thing here, contracting volume, maybe I could get a chance and enter right here, guys. Or else, yeah, I have no choice. For trip, guys, that's what I'm gonna do. If you're in, you're golden. If you want to enter, we want a sideways move or a pullback. So pullback on low volume, then we enter 30-week moving average. It's gonna start going up here, so that's a good place to enter. The bounce off the breakout line, bounce of the 30-week moving average on low volume, and after that, you'd be good to go. Else, sideways move. If it doesn't have actual pullback, sideways move, and after that, a breakout candle like we see here. Thrust, sideways move, explosion, classic stand, stage 2 continuation breakout. So you could buy with stand 3 places: on the breakout candle, on the pullback, on contracting volume, and on just a continuation breakout. So that's pretty much our options we have for right now for trips, guys. For trip. But other than that, man, it's just beautiful. Very constructive. 1 breakout, 2 breakouts. So this one's playable. And hopefully we get a pullback, guys. All right. And plus we have that monthly defined breakout. Remember, we had the one from the previous month, and we have the continuation breakout. Let's go back on the monthly. Right here. We had this one breakout confirmed, going up, and after that, this bigger pattern breaking out, not confirmed, but in a week and a half, confirmed. So we have to see, are we going to bounce off this resistance here, this wall, previous support, turn resistance, and follow this line back to the close to the breakout level? I guess we'll have to wait a few weeks, guys, at least for the monthly candle close, or just to see where the price action goes on the weekly. All right, Trip, that was a fun one. I'll keep that chart open, and hopefully we get a pullback. Ciao.